Okay, so here we are for the final for accounting 203 cost accounting. The final is going to be worth 180 points. It's going to be about 18% of your final grade. Half of it's going to be from exam 1 and 2. The other half is going to be over the last 3 chapters of the class. So this is going to be taken at home. You do not have to go to the testing center to do so. So what I would advise is to make sure that you have all your information in regards to past homework assignments and everything before you go into the test, available to you before you go into the test. Once you're in the test, you have to complete the test. You have until Friday at 5 p.m. to take the test. So if you have any questions, please do not hesitate to ask. So again, here are the chapters that are going to be covered. The first half of the test, or half of the test, is going to be over chapters 1, 2, 3, 4, 5, 9, and 17. The other half is going to be over 15, 16, and 21. So allocating service costs is one of the items that you need to know. You need to know the direct, the step, and the reciprocal. This is one of the last things that we covered in class. Remember the direct, there is only one way. It's like a one-way road. It has no relationship between the service departments and the main departments. The step method, basically the first service department will allocate to the other service department and the other main departments. But the second service department will not allocate back to the first service department. They will only allocate to the 2 main departments, or how many main departments you have. The reciprocal goes back and forth. So think of it as back and forth. The first service department will allocate to the second and the mains. Then the second will allocate back to the first and to the mains, and so forth. And you keep on going back and forth until you get all the cost from the service departments over to the main departments. Okay. Remember, the best way to do these, I would have Excel up for you whenever you're doing these problems, so that it's easy to do these problems. So let's do a problem here. Now I'm going to switch over to the Excel here for you guys. This is available to you in your Blackboard. So in the direct, we have the academic and the registrar. We have tech support and admin. The academic, or the tech support and the admin, are the 2 items that are going to be the service department. Then the academic and the registrar are going to be the main departments. Now, tech support, it said in the information, is going to be the first one that we do. So it has 345,000. Now, tech support is based on tech hours. So when I'm doing the direct, I do not look at all at the 55 for the admin. All I do is look at the 60 and the 80. Now, if I take 60 divided by 140, which is the sum of 60 and 80, I get 42% of 42.86%. I'm going to take that number and multiply it by the $345,000. Then I'm going to do the same thing with the 80. I'm going to take the 80 and divide it by 140. I get 57%. And so then I'm going to multiply that by the 340, and then that's how I get the 197. Okay. Then I'm going to do the same thing for the admin. Admin is based on the usage of admin employees. And then I'm going to take the 10 divided by 90 or 100, and I'm going to multiply that, or I'm going to take the 90 divided by 100, and that's 90%. I'm going to take the 10 divided by 100 and 10%. So I'm going to take each one of those, times it by the 120, and that's how I'm going to allocate the 120. Academic gets 108, and registrar gets 12. Okay? So the total amount is going to be $255,857 to the academic. Registrar is going to get $209,143. Okay, and if you add those up, it is going to equal $645,000. Okay, so now STEP again has the relationship between the tech support, the admin, tech support academic, and tech support registrar. But there's no relationship between admin and tech support. So for the tech support, I'm going to add all three together and get 195. And the percentages for admin is 28% of the tech hours. Academic is 31%, and registrar is 41%. Now, you notice, of course, that these are whole numbers, but in reality, they're using the formulas. Do not round until the end. If you round before the end, then what happens is that your numbers are going to be off. So I'm going to take the 345 times the 28%, I get 97,308. 345 times the 31%, I get 106,154. And then the 41 times the 345, I get 141,537. Now, for the admin, as I said, there's no relationship between admin and tech support, so we ignore that 25. We only do with the 90 and the 10. And we're going to allocate because we added 97,308. This 217 is the 120 that originally was given to the admin department, plus the 97,308. So that's the only difference in regards to, it's a little bit more than what the tech support was, or the direct was. So 207,308 times 90% gives me 195,577. Then 217,308 times 10% gives me 21,731. So the total allocation to academic is 301,731. The registrar is 163,269. Now, if I sum those two up, even though I have this admin number here, remember we did allocate that in the end. So if I add these two up, or add all three up, I'm going to get these 540 or 562,307. But if I add just the 345 and the 120, you notice it's the same as what's in academic and registrar, and that's what your goal is. All right. So in the reciprocal, remember, this is a back and forth, back and forth. So what we have here, now the previous instructor had put together these formulas that you can do. And basically what you do is you take the 345 plus the 28%, which is 55 divided by 195, plus A. And then A, to get the tech support, we do the similar thing. Or I'm sorry, T equals 345 plus 0.2A. Now, how did I get the 0.2A? I take the 25 divided by 125. And A equals 120 plus 0.28, which is, or 2T, which is this amount right there. So you can do it in the Excel going back and forth, and I believe that this is probably easier for me at least. And you do the same concept. You know, the first step is the exact same, or the first two steps are the exact same as the reciprocal. I'm sorry, the first step is the same as the reciprocal. The difference is here that 217,308 in the step, you wouldn't go back to tech support. But because we're doing reciprocal, there is a relationship between administration and tech support. So you have to go back. So you're going to use all three of these numbers. And so over here, I have 90, 125, and then 125 as the total. The academic accounts for 72%, the registrar accounts for 8%, and the tech support accounts for 20%. Okay? So now, if I multiply those percentages back and I get 143,462, 156,462, and 17,385. And then I do the process over. So I start with tech support using the 30, the 41, and the 28. Spread that over admin, academic, and registrar. And then I go back and forth until I get to the bottom where there is no money left over in tech support there, and all the money is now over in academic and registrar. Now, if I add these two numbers together, I get the 465, which is what I needed to allocate. So I hope this helps you in regards to understanding the direct, the step, and the reciprocal there. Now, in allocating joint costs, we have the sales value at split off, the net realizable value, and the physical quantity method. Joint costs will be allocated based on proportion of sales value at split off, the NRV, and the physical quantity. So here we have Tanner Company manufactures product Catran and Claire from a joint process that has the cost of 30,000. Product Catran has 15,000 units or 1,500 units produced, and product Claire has 2,000 units produced. Catran can be sold at split off point at $4 per unit, or it can be processed for additional cost of $2,000 and sold for $7 per unit. Claire basically is left alone. It's not further processed, and the split off point, it would be sold at $5 per unit. So now, if I go back to the Excel spreadsheet, again, this is available to you. We have the information. We have joint costs of 30,000, and that's what we're trying to allocate. Now, the first one, the sales value at split off. Basically, what I'm going to do is determine what is my sales value. Well, for the Catran, it's $4 per unit. We made 1,500 units. So I'm going to take that 15 times 4, and that's how I get the 6,000. Then I'm going to take the 5 times the 2,000. I get 10,000, so a sum of 16,000. We have the proportion. How I get that is take the 6 divided by 16, and then the 10 divided by 16. I'm going to multiply that by the 30,000. So I'm going to allocate 11,250 to the Catran, and I'm going to allocate 18,750 to the Claire. So then the same thing I'm going to do with the net realizable value after additional processing. So the first one I'm going to do here is I'm going to get the sales value after processing. So that's going to be $7 for the Catran, and it's going to be $5 because remember there was no additional processing for the Claire. So now my value after the processing is $20,500, of which what I'm going to do is I'm going to add or subtract the additional processing. So I'm going to take that $10,500, that's my revenue, minus my additional processing, and that gives me my net sales revenue of $8,500. Same thing with the for the Claire, because we have no additional processing, it's just a flat 10,000. So my net sales revenues is $18,500. We're going to take that $8,500 divided by 18.5, and it's 46%. 10,000 divided by 18.5 is 54%. I'm going to multiply that by the 30,000. So my allocation for the Catran is going to be $13,783.78, and my Claire is going to be $16,216.22. Now, based on the physical quantity, we have 15 and 2,000 for a total of 3,500 units. 15 of 35 is 43%. 2,000 of 35 is 57%. So the allocation on that, take the 43% times the 30,000, I get 12,857.14. For the Claire, I get 17,142.86. Now, if we go back to our PowerPoint, some other things you need to know about is the introduction of managerial accounting. Basically, what is the difference between financial and managerial? Financial is GAAP-based. It's more for the outside users. Managerial does not follow GAAP. It's more for the inside users. You need to know about cost objects. You need to know about direct costs, which comprise of direct materials and direct labor. And then overhead, what comprises of indirect costs, which is the indirect labor and indirect materials and other overhead. You're going to also need to know how to identify which ones are direct and indirect and so forth. Okay, so you need to know what prime costs are, which is direct materials, direct labor, and the conversion costs of direct labor and manufacturing overhead. Think of the prime cost as what it takes to start the process, and the conversion cost is what it takes to get the raw materials into the product that you want it to be. Now, in product costs include direct materials, direct labor, and manufacturing overhead. They appear on the balance sheet as inventory and appear as on the income statement as cost of goods sold when the product is sold. Now, anything that's not involved in the product is period cost. Now, I told the other class, I said, remember, pretty much if it's dealing with the building that the product is being made of, that's going to be manufacturing cost or product cost. But if it's dealing with the selling of the product, whether it's an office or administration building or headquarters, that's going to be period cost, because those are involved in the selling of the product. It's not the actual making of the product. So period costs are the non-manufacturing costs, not attached to a product that is not necessary for the product to be produced. They're corporate expenses and appears on the income statement as selling and administration expenses when incurred. Now, cost versus variable, fixed or mixed, or cost behavior. Variable cost and fixed cost. Variable cost is driven by the number of units that's produced, whereas fixed cost is a fixed number. Now, some examples of the variable cost are going to be direct materials, direct labor, and variable manufacturing overhead. The example they give is the amount of fabric to complete a sofa. That would be considered variable because it's driven by the number of sofas you make. Rent would be a fixed cost. It doesn't matter how many sofas they make, they still have to spend $10,000 worth of rent. Some of the typical fixed costs include rent, depreciation, salaries, taxes, and insurance. All right, some of these, we'll just go over some. Rent for the factory, because it's factory, it's going to be a product cost, but it's going to be a fixed cost, and it's overhead. Cotton for the teddy bears is going to be a variable cost, and it's a product cost. It's the direct materials. Thread would be a variable cost, and it would be direct materials. Sewing machines, you could argue fixed or variable. Well, actually, it's probably a fixed cost, but it is a product cost, and it's probably going to be considered manufacturing overhead. Inspectors, that one was a tricky one for some of the students. That's going to probably be a fixed cost because they are probably salary. You could argue either way, a fixed or a variable cost, because their money that could be determined by how many bears that they inspect. But we're going to go with a fixed cost. It is going to be manufacturing overhead because we can't tie it directly to the product itself, unless we, keep track of what they actually inspect. But usually inspectors just like pull once out of so many. They don't inspect every single one. Factory supervisor, that's going to be a salary position probably. It's factory, so it is going to be the manufacturing overhead, and it's going to be a fixed cost. Assembly line workers, those are probably going to be a variable because they're driven by the number of hours they work. Of course, that is going to be a product cost, and it's going to be direct labor on that. Factory cafeteria workers. The key here is factory. If it said headquarters, it would be a period cost, but because it says it's a factory cafeteria workers, it's dealing with the product itself. And so that would actually be considered overhead and probably a variable cost. Okay. Now, office equipment depreciation, it says office equipment. And so that would be a period cost, but it would be fixed. VP of marketing, well, marketing has nothing to do with the actual production of the bear. So therefore, it is going to be a salary. It's going to be fixed. It's going to be a period cost. Advertising, that's dealing with the sale of the product. It's not dealing with the making of the product. Therefore, it's going to be a period cost. Now, you could argue that that could be variable or fixed, depending on their contract or such. So you could argue either way. Factory security guard, because it says factory, it is considered a product cost, but it's a manufacturing overhead because it's not related directly to the product itself. Headquarters security guard, because it says headquarters, it's a period cost, and it is probably either variable fixed. Both of those are probably either variable fixed. You could argue either way on that one. Accounting department, of course, that is going to be a period cost, and depending on the product itself, it's probably, and for these purposes, a variable cost, but it could be a fixed if they are on salary. Shipping costs to send teddy bears to customers. Well, that is shipping costs to send teddy bears. That's not the product making of the product. That is after the fact. So that is going to be a period cost. Glue for the teddy bear's eyes and the materials for the teddy bear's eyes, both of those are going to be considered product cost. And I would believe those are variable costs because you can't, it's driven by the number of bears. Depreciation on sewing machines, that's going to be a fixed cost. It's going to be a product cost, and it's going to be manufacturing overhead. Factory property taxes, because it's property taxes on the factory. It's considered a product cost, and it's manufacturing overhead. CEO fixed bonus, well, that says it's a fixed cost, but it's considered a period cost because the CEO does not make the product. Uniform for the assembly workers, that's going to be a variable cost because it's driven by the number of assembly workers. It is going to be a product cost because it is for the assembly workers. And then the factory janitor, that is probably either going to be variable fixed, depending if he's on salary. It's going to be a product cost because he is working in the manufacturing facility, and it's going to be overhead. Now, another thing is you need to know how to do the raw materials, beginning balance, purchases, and then what goes into work in process, and then the ending balance. And then how to figure out work in process with the beginning balance, the direct materials that are coming from the raw materials, the direct labor, the overhead, and then you subtract the cost of goods manufacturing to get your ending balance. And then your finished goods is your beginning balance plus what you brought out of work in process minus what you sold to get your ending balance. I would highly suggest that you do the T accounts for these. I think that's going to be the easiest way for you to do that. If you have any questions, please do not hesitate to ask on that one. Now, another thing you need to know about is the break-even point. Remember, revenues minus variable expenses minus fixed costs equals 0. Your target profit, basically you use the same accounting equation, but instead of 0, we put what you want. Your margin of safety is the current sales dollars minus break-even sales dollars. Margin of safety ratio is your margin of safety divided by your current sales dollars. Income before taxes, you take your after-tax divided by 1 minus the tax rate. And then the contribution margin per unit, you take the revenue per unit minus the variable cost per unit. That's going to give you your contribution margin per unit. And then your ratio is your margin per unit divided by your sales price per unit. So let's look at this. Tea Times Incorporated produces and sells the finest quantity of golf clubs in all of Clay County. The company expects the following revenues and costs for the 2004 for its elite quality golf set. We have $240,000 for 400 sets that we sell. We have variable costs of $160 and fixed costs of $50. We have a 35% tax rate. How many sets must be sold for tea time to reach break even? How many sets must be sold for each to earn a operating before tax of $90,000 and then after tax of $90,000? What is the contribution margin per unit, and how much can sales revenues fall before tea times begins to lose money? So let's go ahead and take a look at the absorption costing on the Excel spreadsheet. So we have the $240,000 in revenues. Now, my variable costs, I'm going to break this down by unit. My direct materials were $50,000 divided by 500. I am not sure where they're getting these numbers, to be honest with you. Here's this one. I'm sorry, I was on the wrong screen. All right, so we have variable cost per unit. That's $160,000, fixed cost and $50,000, and so forth. So what I'm going to do is remember the revenue minus the variable cost minus the fixed cost. Well, we have the revenue is $600 per unit, so that's 600 U. My variable costs are $400 per unit. Now, how did I get that? We sold 400 sets, so I'm taking 160 divided by 400. That gives me the 400 per unit. So I'm going to take that minus 400 U minus the 50,000. We don't break that off here. So adding the U's together, I get 200 U's minus 50,000, and then 50,000 divided by 200 gives me 250 units. Now my break even in sales revenues, all I have to do is take the 250 times my 600 per set. And so to get the break even sales revenues, it's going to be 150,000. Now, how much do I have to get a pre-tax 90,000 profit? So I'm going to take that 90,000 using the same equation, 90,000, and I'm going to set it equal to the 600U minus 400U minus 500. I'm going to combine like terms. So now I got 90 equals 200U minus 500. So add 500 or 50,000 to both sides, and then divide 140 divided by 200. I get 700 units. So to make 90,000 pre-tax, I have to sell 700 units. Now, the next thing I'm going to do is the after tax. Well, my tax rate is 35%. So I'm going to take my after tax, my before tax income, and set it equal to x over 1 minus 35. So I'm going to have 90,000 equals x divided by 1 minus 0.35. Okay? So now I have 90,000 equals 1, or x time, or divided by 0.65. Oh, my after tax. I'm sorry. The after tax is 90,000. So I'm going to take the 90,000 divided by 0.65. 90,000 divided by 0.65 is 138,462. Then I'm going to plug that into the equation where 138,462 equals 600u minus 400u minus 500. And then when I solve that for the u, I'm going to get 942.31 clubs. But remember, actually, this should actually be 1944 because you can't sell a partial club. And if I sell less than 942.31, I'm not going to get my after-tax profit of 90,000. So in these cases, I can't exactly hit the 90,000 of after-tax profit, but anytime you're using these type of cases, you always want to round up. And I'm sorry, that's 943. So in reality, I'm going to get a little bit more, but I'm still hitting that $90,000 target. Now, what is my contribution margin per unit? I'm going to take the 600 minus the 400. So my contribution margin to my fixed cost is 200 per unit. So now my break even, my margin of safety is the 240. And that's my current sales dollars. My break even is 150. And so the difference between those is 90,000. So my margin of safety ratio is going to be 90 divided by 240, which is 37.5%. So that means I can drop my sales by 37.5% and still make a profit. Okay. Now remember variable and absorption costing. Variable costing is for internal use and does not follow GAAP. It is only includes variable product costs. So I talk about above the line and below the line. So all variable costs go above the line, no matter what type of variable cost they are. It does not include fixed manufacturing. That all goes below the line. Now, over in absorption or full costing, only